This is a strange recession. A lot of people saying we don't really understand the true pain because of the amount of money pumped into the system on the fiscal and the monetary side, supporting the balance sheets of consumers. Jamie Dimon indicated some caution earlier this year. Are the results that we're seeing now with lower loan loss provisions, lower write-downs, does this indicate that the economy is in better shape and that these banks are poised to do very well in the upcoming quarters?
Actually, it doesn't reflect any of that. And this is what's so, I was fighting this, as we were going into it, is this new accounting called CECL creates this dynamic. If you look at credit costs, true credit costs, which is net charge-offs, absolutely flat to last year. We're not seeing any increase at all because of all the stimulus you've talked about. On the other hand, you've had headline economic news that's been so bad as we went through the downturn and the shutdown in the second quarter, that the accounting forced all this build of provision. So the earnings were getting hit artificially just on expectation and guesses of what was going to happen. It was models. It wasn't real losses. So now what we have is the third quarter economic activity gets better. Well, the accounting then forces the provisions to fall very dramatically, which is why you have such a dispersion out there with, people trying to estimate what the provision is going to be. They haven't really locked in yet to this accounting. So all that to say this, there's been a lot of dislocation, a lot of disruption. The banks have built provisioning 3 times faster because of the accounting than what they did in the last recession. And now it's a wait and see. 2021 is when the actual losses actually will begin to be realized and recognized. And it'll become clear as we move through next year, did they get ahead of it or do they still have some more to go? Either way, this isn't about survivability. They have enough capital. If banks can sustain their dividends, which they've been doing, if they can preserve their capital, which they're well-positioned to be able to do, and if they can build the provision, which the accounting forced them to do, they will accomplish success through this recession, and the discounted valuations will eventually be proven wrong. It'll just take some time to get through that whole process.